morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. In the international market, the 10-year US Treasury yield jumped Friday after February jobs report topped expectations, sending the benchmark yields to its highest level this year. The Labor Department reported that the US added 0.3 million jobs in February, much stronger than the expectations of 0.2 million jobs gain. Bond yields have been rising as economists and Wall Street strategists have grown increasingly bullish on the economy with the rollout of COVID-19 vaccines. The prospect of strong economic growth and budding concerns about inflation have pushed down the prices for bonds. The US 10-year closed at 156 and 30-year closed at 2.28 percentage points on Friday. German 10-year is trading at minus 0.30 percentage points. In the crude oil market, as you know, OPEC Plus decided on status quo and refrained from easing the crude oil production cuts from April. Crude is trading at $70.76 per barrel. Short-term range for crude seems to be 66 to 70. Knight Research $70 target has been achieved and we have booked profits once again. Once the OPEC Plus eases the crude oil production cuts, we will see a 5 to 10% correction in the crude oil prices, and that will be another entry point next month. Next OPEC Plus meeting is scheduled on 1st of April. In the currency market, dollar index or DXY is at 91.88. DXY had touched 92.19 high Friday. DXY's today's range seems to be 91.64 to 92.19. As the job reports topped the estimation, 1.9 trillion stimulus and the rollout of COVID-19 vaccine are fueling this strong US economic rebound. USD CNY Chinese yuan is at 6.49. USD INR with a high of 73.09 closed at 73.02 Friday. We are seeing daily highs and daily higher closes leading to 73.30 support. USD INR's range for today seems to be 72.90 to 73.30. For exit range, we will be providing you the exit range for the trading once the market opens. In the domestic market, government bond prices ended sharply lower Friday because the Reserve Bank of India devolved a large quantum of bonds on primary dealers at the weekly debt sale. Let's start by analyzing 5th March 2021 GSEC auction. 515 GS 2025 cutoff came at 587. Auction size was rupees 12,000 crore. RBI accepted rupees 6,180 crores and rupees 5,819 crores were devolved on primary dealers, which means 515 GS 2025 almost half the auction was devolved. 585 GS 2030 cutoff came at 6.22. Auction size was rupees 12,000 crore. RBI accepted only rupees 1,104 crores and rupees 10,895 crores were devolved on primary dealers, which means almost 11,000 crore devolved from an auction of 12,000 crore. What message does this devolvement send? Weak appetite, none of the market participants willing to buy more stocks before 31st March. RBI is not willing to accept bids at any rate. At the same time, it seems RBI has left the battle to keep the yields below 6%. Not to forget that this is the 5th consecutive devolvement on the primary dealers, and this devolvement was even after the announcement of rupees 15,000 crore OMO in on-the-run securities like 515 2025 and 585 GS 2030. Now let's look at the trading data for government securities on Friday. The following parties were net sellers on Friday. Foreign banks with rupees 3,624 crores, primary dealers with 3,438 crores because of the devolvement. The net buyers on Friday were others, you can think of it as RBI, at rupees 2,624 crores, mutual fund houses at 1,962 crores, public sector banks at 1,036 crores and private sector banks at 1,450 crores. What does this trading data tell us? Primary dealers sold partial devolved stocks in the secondary market. Others or RBI tried to buy back those stocks. Foreign banks, since the US yields rising, has continued to be the net sellers of the Indian bonds. Mutual funds, public and private sector banks have bought some at the reasonable level, and they are willing to buy something at 622 and above. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Night Fintech. See you tomorrow with a new episode of Night Snippets.